Hey, what's going on? This is Steve Place, the lead strategist at Market Traders Daily, and today we're going to talk about the market moving event that everyone is focused on and why it's a giant distraction. And I'm going to show you the things that you should actually be looking for headed into 2025. So, we're going to start with Nvidia. Nvidia reports earnings after the close on this video. I don't care. I don't care about Nvidia anymore. The juice isn't worth the squeeze. It's a $3 trillion stock, right? If you want the stock to go up another 30%, you're going to have to see an introduction of another $1 trillion in market capitalization, right? That's not me being bearish. It's just me saying that this narrative is reaching its peak. It's already played out, and you can day trade this stock and you can swing trade this stock, but looking for that single big move, that was 2022, man. The trade's already done. It's moved on. On top of that, everyone is still watching the semiconductor sector thinking that it's the leading sector, and it really hasn't been. We can take a look at the price chart of SMH, which is a semiconductor ETF, has a very large weighting in Nvidia, and Micron and AMD and a few others, and you compare it to the performance of the NASDAQ 100. It hasn't performed. There was a parabolic spike in the summer of 2024, and since then, everything else has been moving because that's what happens under rotation. So you have this narrative, and financial media is going crazy. They're going to talk nonstop about what Nvidia is going to do next and what's in store and how it matters for AI and crypto and how many people are going to buy the H100s and whether Supermicro is going to continue to be a vendor for Nvidia. All of these things, which sound great when you're on CNBC and you need the eyeballs, or if you're writing a blog and you need the clicks, that's fine, but it's not giving you an edge. Okay, I think that a better trade right now is the one that nobody wants to touch. And it's going to be related to the deregulation that's going to hit in 2025. Now, there's a lot of different themes associated with this, okay? You've got rare earth minerals that could be in play. You've got agricultural stocks that could be in play. But the interesting spot that I'm looking at is OIH. And OIH is the oil services index. If you're going to drill, baby, drill, you're going to have to buy the drills from someone. So the oil service space, they don't pull oil out of the ground, but they get paid by those who do. So if there is a large renaissance in energy production going into 2025, there's going to be an increased demand for these oil service plays. Now, what I want to do is show you how malinvested this space is right now. This is just not a space that has seen a lot of investors. There's not a lot of liquidity. Some of that's because of ESG regulations. You know, BlackRock put some in place saying, oh, we don't want you to invest in oil companies and we want to be ESG compliant. All of that's now out the window. No one cares about that anymore because we're going to get cheap energy and we're going to build things. One of the benefits of the AI revolution is that every major AI company is scrambling to get their hands on electrons. Okay, they need power, and it doesn't matter where it's coming from. So if you look at the nuclear play, here's SMR. This is small modular nuclear reactors. This sucker's going crazy. If you look at Quad U, which is energy fuels, could be breaking out here soon. This is a uranium play. You've also got Lumen as an example, which provided the fiber and the power connections from the cheap sources of energy in Louisiana to the AI companies. And that stock went from $1 to $9, right? Really nice moves. So I think that the oil services play is going to be one to look forward to. Now, look at how this market has traded, and this goes all the way back to 2005, right? It just has not done well. And some of that is because, you know, energy as an investment source inside the US has continued to decline. A lot of these stocks had to be dilutive, which means that they had to raise financing through equity issuance. And that caused, you bring more supply of stock online, the market's going to go down. And then if you look at OIH relative to the performance of the S&P, all right, it's nowhere close to what we saw back during the heyday when crude oil was at $140 a barrel back in 2007. But you can see that there has been a bit of a trend change. It's not, it's not fully fleshed out yet. But this is a spot that I think could be worth a look going into next year. Now, you've got a lot of different names in the oil services index. You've got the offshore folks like Diamond Offshore and Transocean, which is rig. You've also got the drill components, and there's a lot of other things. So if you do want to learn how to invest in this space, what do you have to do? Well, you have to become an expert in energy production. You have to know where the demand is going to be, because there will be winners and losers in the oil services market. Or you could cheat, and you don't have to be an expert in this space. You just have to follow the people that are, okay? And those people tend to work inside of these companies. Those are the corporate insiders. And if they think that their company is uniquely positioned for a strong move higher into next year, they're going to start buying their stock right now, and they're going to continue to buy their stock headed into the end of the year so they can position into the next administration. Those are the names that you want to be looking for. If you want to learn how to do this, we're going to be doing a free training soon talking about exactly what to look for with these insider purchases. So you don't have to be an expert in the energy markets. You just follow the people that are when they put significant skin in the game. Below this video is going to be a registration link so you can sign up for our class. I look forward to seeing you on the other side. Take care.